Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The index has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, it seems to be that September is going to end on a somewhat choppy note for the Nasdaq-100.
Yeah, it seems that way. We close the quarter tomorrow. I mean, the month, I should say, and we certainly are down. We're down almost 5% on the month to date. We've been highlighting the seasonality effect, where September traditionally is one of the worst performing months of the year, and that certainly has shined through this year in September.
Right, and then October too, another seasonally volatile month, and we have a number of macro factors that could even highlight that there. But let's pull up your Bloomberg here. I want to talk about rates to kick this off, because the chart that we had looked at last week certainly has played out as we saw the spike in rates.
Absolutely. So we did see a spike higher in rates. So this here is a chart of the 10-year Treasury yield. And if we zoom in, we spoke last week on Thursday, and the day before Wednesday was the Fed FOMC. This here is what happened on Thursday throughout the trading session. We had a spike higher. It happened early in the day, and we broke out of a range that the yield has been in for a couple of months or so. It was between roughly 1.2526 to 1.38, and we essentially went from 1.25 to let's say 1.3 to 1.54%. So we went up about 24, 25 basis points in just a few sessions. So a pretty phenomenal move for the long yield over that time period. You know, what the Fed had said the previous day was, you know, they could begin to taper it at the next session. Tapering would potentially go into, which, by the way, the next session is, the next meeting, I should say, is in November. That could last, and they could be finished with the tapering by mid-2022, and only then would they look to potentially raise interest rates. So there was a bit of a delay, and but the yield, as we can see, did spike higher. When we were talking last Wednesday or Thursday, we noted that the spread in the 30-year, 5-year yield, so this is the long end of the curve, which can potentially be a barometer for economic activity, you know, had been falling for quite some time. It peaked in the first quarter, and just made a lower high in the second quarter, and then really here in late second quarter, it's in the third quarter, it's been trending lower. We spiked down to a low that we saw it back in July. So we made this low last Thursday, and we did highlight last week that maybe this could be a potential low. And if this was to then bounce and move higher, that would be an indication that long yields were moving up, because typically the shorter end of the curve is kind of sticky these days with the Fed at the zero bounds. And that traditionally bodes well for financials, energy, and cyclical groups, the value stocks, and the opposite would be the case for the growth stocks. And that's actually what we've seen play out here. So, this is the value index, and you can see it's kind of been in a, trending in a sideways range. But if we were to look now at what happened in the growth index over this time, we could see it looks a little bit different, and it's been has a little bit more of a toppy look to it. And so now I'm going to flip this over to the Nasdaq-100. So we were looking at some levels last week, and I wanted to see last week the Nasdaq-100 get above two levels: the price gap at 15,291, which we did, and then I wanted to see it get back above the 20-day moving average, because that is a common retracement level in uptrends and downtrends that stocks and indexes tend to retest before resuming their trend. And so we didn't even get back. We did fill the gap, but we did not reach the 20-day moving average. So certainly not an all-out bearish signal, but just said to me that we weren't yet, out of, the coast wasn't yet clear, so to speak. And so here's what we are now looking at with the Nasdaq-100. We have a potential topping pattern here, commonly referred to as a head and shoulders pattern. We have the left shoulder here built in July and August, and last week's rebound that fell short of the 20-day moving average here on the right side as well, and then the highs from early September up above. The range of this pattern between the neckline and the top of the 52-week highs is about 928 points. That would suggest we could have a move lower of nearly 1,000 points if we broke this neckline, which is about 5 to 6% in the index, maybe 6% or so. So, even if that were to happen, it wouldn't necessarily be a dire situation. Just would indicate that, you know, for whatever reason, seasonal factors, macro factors, policy by Fed, overseas concerns, maybe out of China. Um, there could be a lot of reasons for it. There's always been a lot of headwinds, on this rebound of last year's lows, but and risk factors. But if we were to break here, the minimum measured move from a technical standpoint would be down about 1,000 points. So it doesn't have to play out, but that's kind of the expectation that many technicians will use on something like this. This does not have to be a topping pattern. I've seen many patterns like this in the past hold this support level, and it turns out to be what we call a continuation pattern. So a lot to play out here in the coming days and weeks ahead. We are just about to enter, Q3 earnings season, so corporate guidance maybe could have quite a bit of an input as to how this plays. But this is the levels that I'm looking at right now.
All right, Brian, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.